Next up, we have Steve Denny. He's a business advisor and coach who teaches business owners how to grow the value of their business and then realize that value when they are ready to retire. Steve is presenting us with Back to Common Sense today, and you will notice the spelling. As we approach the fall and end the year, September is the perfect time to review the common sense analysis. The business tool helps business owners avoid the year-end surprise that could come when the accountant and tax preparer review the business performance in preparation for the year-ending reporting. Without further ado, Steve.
Thank you. Damn, that's an old picture up there. I haven't seen it in some time.
Looking good.
Oh my goodness, my goodness. Yeah, back to common sense. Fall is for planning. Fall is for planning. Right? We're getting to the end of the year. We're getting to the point where we're going to be spending a lot of time with our family and friends to the end of the year. Time to begin to integrate some planning into the end of the year so that you can start off the new year on the best foot. And I'm going to talk to you today about back to common sense, but I want to give you a couple of things to start with. So I'm going to talk about, and you guys have heard me talk about this before, the basic accounting model, right? Which is sales minus what?
Expenses.
Expenses equals what?
Revenue. Income.
Profit.
Profit, right? Okay. Proper planning, I want to encourage you to think about this a little bit differently. And if I just go back a second, when we think about sales minus expenses, think about profit is, or a loss, is really what's left over, right? If you have sales, you take your expenses off of that, whatever you get from that is what are leftovers, okay? I want you to think about this a little bit differently. I want you to think about sales minus your planned profit, right? So as you're planning, I want you to plan for profit in 2024. And I challenge you to plan for 2024 to be your highest profit year ever, okay? And if you plan appropriately, I think you will actually receive it. And I have seen that happen many, many, many times. The key step is planning for it, right? So if you have sales minus planned profit, what's left over?
Expenses.
Not just any expense, allowable expenses, okay? Allowable expenses. If you're planning for profit, I find that as a result of that, you're going to be much more discretionary about your expenses. Make sense? All right, so hopefully that will be something that will be interesting for you to consider as you're beginning to plan for the year. But I'm going to take you on a little bit of a journey. So you guys have heard us talk before. In working with business owners, we always recommend you never look at numbers in a single column. Always look at numbers when you're reviewing your financial performance of your business. Remember, numbers is the language of your business, right? Never look at them singularly. Always look at them in relation to something, okay? They only have benefit when you're looking to them in relation to something. So when you're looking at your profit and loss, which, how many business owners look at their profit and loss statement? How often do you look at it?
Once a year, right?
Once a year?
Every day. Well, you need to know. Every blue moon.
Yeah, right? What's the first thing you look at when you look at your profit and loss statement?
Bottom line.
Well, why is that, Brian?
Because that's the profit.
Why do you look at that first?
Fun stuff. Because that's it's the most important number, I guess.
Yeah, you're trying to figure out, did we make money or not, right? But if you think about planning for profit, right, now maybe it will change the way you think about looking at your profit and loss statement, okay? So look at them in relation. Put them one by one, okay? So look at your prior months. We call this an income trend. And ideally, the way we teach it in our classes, business owners should be looking at current month and prior 11 months. So you're looking at 12 full months of P&Ls month by month, right? So you can see that, lay it all out there in that regard. But common sense, what does common sense mean? You look at all these columns of numbers, what's going to happen to your brain? It's going to put you right to sleep, right? Or blow it up, yeah. look at the percentage columns in there. So percentage says that each of these line items are a percent of the total, right? So if the total's 100%, that's 100 cents, C-E-N-T-S, on the dollar. And your expenses are how many pennies of that 100 pennies. Does that make sense? That's the common sense, okay? So you want to be actionable about managing your profit and loss statement. Don't focus on the dollars as much as you're looking at the cents, right? Remember, we're planning profit and we're allowing expenses. Now you've got the barometer looking at common sense. Make sense? Okay. Got an exercise for you. I'm going to show you how this works in real life. Here's a real business.
So Steve, if you're looking at your line item for that month, you're comparing it to the percentage of other 11 months to see how far in line and how well it is. Is that right?
Yep. Yep. Particularly if you establish a budget. If you establish some level of control for yourself, right? Okay, so you got a real business in front of you. Doesn't have September numbers yet, because this is September what?
20.
How many times do you get your financials from your accountant by the 20th of September? Not very often, right? Crazy. You get your reports typically 2, 3, 4 weeks after the period. Okay. All right, so you see this business here. What does this tell you? Can anybody, looking at this, what do you know about this business from looking at it? Any comments?
Turns a profit.
Huh?
Turns a profit.
Makes money. I know, Brian, you always started in the bottom right.
Yep.
What else?
The expense percentage is low.
Yeah. Yeah. What else?
March is a bad month.
Yep.
Cyclical.
Okay. I want to walk you guys through a quick exercise, okay? And it shouldn't take you more than 5 minutes, all right? Here's what I want you to do. For each line item, starting with cost of goods sold, I want you to look at all the percentages across the line, circle the lowest one, okay? And then go down each line item and circle the lowest percentage.
No, I don't want to hear what that is.
We can fix that. We can fix that.
100% digital. You need it?
Nope, got plenty.
Steve, can I grab one from you too?
Yes, sir.
You're not just saying that to me, you should have, right?
Nope, I'm digital today too.
Forgot to put it on this morning. Anybody else need a pen?
Steve, there's a lot of zeros in these.
Yeah.
Yeah, just circle 1 0. If there are multiple zeros in one line, just circle 1. Just circle the single lowest percentage in any line. And work your way
If there's no
down.
number,
Sir,
what if there's no number?
just skip it.
Okay.
Obviously, the first 0 you see, you can circle that because nothing's lower than 0, is it?
Negative.
Negatives are anomalies.
That's what you got in February for advertising.
Obviously, they use you, Mark, for office supplies, really low expense.
Good job, Mark.
Well, I know who it is to make sure you're correct. And as long as we pay, we can reduce that to less than 0.0. That's how you can make money in bonds.
Yeah, maybe they're out of paper.
As you're going down this, there are going to be some line items that throw you. So some things like insurance, you will see there are some months where it's 0 and maybe 1 or 2 months where there's a bigger expense, right? Just select the lowest one. That's the first step. And what I should have told you to start with is don't overthink it, right? Just zip through it. While you're looking through that, I will share with you that basically you are also seeing that expenses are fungible. They change from month to month, right? Okay? So, and you will see some expenses don't get incurred in some months, and some expenses, they get incurred, you know, for the entire year. Once you get through this, basically what you're seeing is that this is history, first off. This has happened in the business. This is facts. We're not dealing with mystery. We're not dealing with what if. We're dealing with facts, okay? This has already happened. So in reality, the business ran for a whole month at that level of expense, okay? So fix that in your mind. Now, for things like insurance that you only pay maybe once or a few times a year, you know, that is the exception to the rule. But the rule is, if the business lived at that level, then the question I would invite you to consider is, can the business live at that level continuously? Okay? As we talked about earlier this year in E4e, if your marketing expense is less than 1%, the answer is no, your business can't live at that level if you really want to grow the business and succeed. Okay? But again, it's fascinating when you look at your business in retrospect, you can see what it actually lived with, right? And that can inform your decision making as an owner with what can you live with moving forward, okay? The second part of this exercise is to go back to each line item and say, okay, if 0 was what our best performance was, is that reality? Can we really live with that? And I would invite you on things like insurance expense. Let's say your insurance expense is $1,200. Well, plan on $100 a month, okay? You might pay it once a year, but build that into your plan so you're not forgetting that you've got these pending big payments coming on, right? Because what happens in a situation like this is business has, you know, some big expenses that hit it, and all of a sudden it gets negative. And if you're the business owner that waits till you get your business report and you look at the bottom line at the first thing you do when you get your business report, you say, oh my gosh, we lost money last month? You might be panicking. But if you know why, and if you had planned for that, you know, it shouldn't be a surprise to you. Make sense? So common sense looking at it from a common sense standpoint can be very informative. Can you see how that can be a useful tool as you're evaluating your own businesses?
I want this business.
Huh?
I want this one. It has $1 million of net operating income, no employees, no contractors.
And this is only 8 months. This is only 8 months. Now, here's what happens. So here's this business owner, and he's been running this business, and he's looking at his reports each month. He says, yeah, we're profitable. No, maybe we lost money here. But they lose sight of the fact that, my gosh, my business produced $1 million of profit so far this year. John, what happens in December when all of a sudden his business has produced $1.5 million and his accountant calls him? What do you usually tell him to do?
Well, first of all, what we do is see what we want to pay in tax.
Well, a sharp accountant will do that. What does the average accountant do?
Not a damn thing.
Yeah, the average accountant doesn't do a damn thing other than say, go buy a truck. Or have you saved the $500,000 that your tax bill is going to represent? Because you're going to have a big bill this year.
Also, what you got is this, that I would question where you have negative expenses, for example, interest expense.
I can't explain why on how the accountant did what they did. We're only dealing with the facts of this is what his report is, okay? All right, so I can't get into the weeds with you on this particular business. But, so does that make sense to you? Most business owners, I hear this time and time again, they get the surprise call in December. My gosh, you had a great year. Are you prepared? Have you put enough money aside to pay the tax man? Or go out and buy something so we can add some depreciation on and we can reduce your taxable liability, right? Have you heard of business owners that have experienced that? Okay, start in September knowing where you are so that you have a little bit of time. If you didn't realize that, my gosh, we've made $1 million this year, and maybe your business has grown very rapidly and you've had to use that cash to invest in working capital. You don't have any cash reserves, right? But your business has grown rapidly, but at the end of the year, you're going to have a big bite. You've got to be prepared. John?
I would start in March or April, as far as looking at it to see what your profit's going to be for the year. From several standpoints. One is from an operational standpoint, to make sure that the company is going in the right direction. Second is from a tax standpoint, to see what you can do with adjusting entries at the end of the year in order to minimize your taxes.
You are so right. Such great advice. And I would tell you that if you plan this fall and begin doing this and looking at your numbers in relation, you're going to be following John's advice, because as you get into March and April, you're going to be thinking along that line and you're going to be having those conversations with your trusted advisors like John.
One other thing is, and we're running into this right now with the client, we have a low profit for the year 22, but we did not file a return without extension. We are looking at 2023, where we're going to have $2 million of profit.
Yeah, now you're starting to get into the advanced class. So hold that thought. We want to get you up here one day to start teaching us some of that stuff. Okay. Yes, Richard.
Well, if you use Kathy Sexton's deal, every time you get a deposit, I always take 10%, put it into my savings, 5% tax, 5% profit account. So you're taking 20% right off the top.
Wonderful practice to start. But again, you know, you're being intentional. You're planning for that up front. Now, we talked about, and I've only got a few minutes left, so I apologize. I'm hurrying, right? You thought this was a great business. Got $1 million of cash flow. Any other comments about this business? Would you all agree it's a pretty good business?
I will also say that I missed the payroll expenses line item, which is not super high, but I thought this was a one-man show.
Yeah.
Because I didn't see anything on there for labor.
Let me also invite you to think about, you know, looking at this sheet of columns, unless you are somebody like John that does this for a living, this will put you right to sleep, and nobody's going to relish doing this every month, right? I want to invite you to look at it a little bit differently, okay? So here's what we've done, is we've looked at just the total income line. So let's look at the picture of the income. Now what do you think about this business? Any comments?
Pretty level.
It's kind of sagging.
Yeah, the trend is negative,
Right.
right?
Yeah.
Trend is negative. They need Karen badly, right?
Need some work.
I'm gonna go a little over.
I didn't tell the boss on you.
Thank you. Trend is negative. And what the heck happened in May? May's a 5-week month. What the heck happened?
Vacation.
Maybe. But as a business owner, isn't that the question that comes to mind? What the heck happened in May?
All their goods were in ships sitting in the harbor in Los Angeles.
So let's look at it in relation to a couple of other things. Wouldn't you expect cost of goods sold to follow the sales line?
Yes.
Does this open some additional questions for you as a
Yeah.
business owner? Some other things going on here, right? Let's look at it in relation to payroll. Wouldn't you also expect payroll to follow cost of goods, or excuse me, follow sales?
No.
All right, now we're getting into the advanced class. If you're a business owner and you are allowing payroll to be level like this, and you're talking about planning your profit and maximizing your profit, you're going to make some adjustments, right? This says to me that in January, my people were pretty darn effective. They could handle $250,000 of sales in January, right? But at the same level, in back here in August, we only did $200,000 worth of sales. But I had the same level of expense.
Depends if their industry is dead in May. Are they always dead in May? Like I can tell you in my business what months are busy and slow. So if August is slow, I know I better close the doors. If I'm busy in November, I'm throwing a party.
There is some seasonality to your business. I would invite you that every minute in your business, if you haven't figured out what every minute costs, do the math, figure it out, right? Send people home early, give them a day off a week. Reduce your payroll expense when your sales go down. And if you can't get comfortable with that, tell your people, look, sales are way down. What can we do? Let's spend this slack time figuring out what can we do to get sales back up. Let's brainstorm as a group. What can we do? Right?
That's for salaried employees as opposed to hourly.
This is total salary expense total payroll expense for this company.
Remember, their salary though, you can't send them home early and pay them less.
Then you've got the choice is what can we have them doing in their slack time that helps us raise sales?
Yeah.
My point is, don't fall for the excuse that payroll is fixed. Payroll should be fungible in your job. People work for you to perform a task. Right? Yes, John?
How much of your January sales were a flip over from the prior year?
You got lots of questions to ask, no doubt. But again, now same thing, when you're looking at net operating income, this does more closely follow it. But again, what the heck happened in March, right? My point of showing you a picture of the numbers is, can you see how much easier it is to see what's going on in the business? Okay, so we went through this exercise, right? I will tell you, you guys all did this. At home, take this and add up how effective could this company be if they were really good at managing their expenses from period to period, right? How good could they be? Remember that they've already proved that they could operate with expenses at a certain level, right? If we take some of that variability out of it, how much more would they put to the bottom line? I think you would be surprised at how much more. So with that, I want to direct you to, and I'll get to your question in just a second, John. I want to direct you to two things. One is e4e, YouTube, right? We have lots of these talks out there. There are lots of these tools for business owners out there. And if you want to learn specifically more about this kind of thing on the finance side, I direct you to CEO, where we provide some additional detail about this kind of stuff. With that, John.
I would question the accountability also.
The accountability, what do you mean?
The way the expenses are being expensed. For example, they've got no amortization on some of the months. If you're amortizing something, it would be throughout the year. Secondly, on depreciation, you got $31,000 in 1 month. I mean, that's questionable as far as from an operating standpoint, what would be going on.
The interesting thing is I will tell you that the finances that you're looking at are produced by one of the biggest accounting firms in St. Louis. Okay? So you're asking excellent questions, John. Excellent questions, right? But this is not a single accountant working out of their basement. This is a very prominent firm that does this. And all we did was just take the income statements that they provided that client every month and lay them out in an income trend. So my point of that is, look, as a business owner, it's incumbent upon each of us to understand this, not necessarily rely on what our accountant tells us it is. But there are excellent questions that are in these numbers. And we need to understand the numbers of our business so we really understand what's going on. So back to common sense for the fall, folks, and use fall for planning so that you can have your best profit ever in 2024. Thank you.